Hello and welcome to Skills to Pay the Bills. I'm your host, Tia Young, and today our subject area focuses on risk management strategies for small business owners and their families. Our two panelists are Shirley Liu, Executive Field Chairman for First Financial Security, and Anthony Ruiz, Assistant District Director, 8A Business Development. We are also honored to have in the studio small businesses in the community and also community observers from the Washington, D.C. metropolitan area. I'd like to take this time to thank the panelists and also our small business owners and our community observers for taking the time out from your busy schedules to be in the studio with us today. So first, we're going to get started because we don't have a lot of time, so we're going to get right into it. I want to start out with Shirley. Hi.
Hi.
How are you doing?
Thank you.
And I'm going to say hi to Anthony over
Hello.
there in the corner. How are you?
Fine, thank you.
Thank you both for being with us today.
Well, thank you for having me here. Well, one of the things that, as a business owner out there, I believe risk management for business is so important. When you have a business out there today, it's really important to take a look at your business. How do you grow your business? At the same time, what happens if something happens to you? If the business fails. So you got to look from prospect, from protecting your business partner, protecting your business. Then you look at protecting your family. I will share you this here. My husband previously passed away. We had a business, and a lot of time, you go through daily lives doing businesses, and you don't think of these kind of things. You don't think of protecting that business. Well, who's going to run that after you pass away? I mean, what if you get hit by a bus tomorrow? You ask any business owner, what happens if you get sick tomorrow and you're just unable to work and incapacitated? You can't do anything at all. Who runs it? What happens to that? Then you look at, other situation where, what if you had a situation like could be lawsuit that happened, someone goes in front of your store and suddenly they slip and fall and then they turn around and they sue you. And I've seen that happen. So from a business standpoint, I think all those criteria is really important. And then you're looking at from financing standpoint, how do I finance my business? Where do I get the money from? Where else can I get help? And that's where hopefully you come in, yes, sir, and help us in that aspect of it. And the other things, last but not least, I think it's also important from a business owner standpoint. They work so hard all day long, and they don't think about retirement, And then suddenly you're there 50 years old, 60 years old, and you're like, oops, I have to retire in 5-10 years. But where do we get the money for retirement? What, start putting $200-300 a month? Well, that ain't going to work. So I've got some really unique programs out there I don't think people knows that they exist that I like to share today.
Well, Shirley, are there situations where, individuals have really built up a successful business and now it's 40 or 50 years maybe down the line and they really don't want to sell the business. They kind of want to give it to the kids or something, right, but they have to because they haven't prepared. And so they have to sell the business in order to have money to retire on. Does that happen?
It does. Actually, there's a lot of business. Let's take two approaches. One approach is that you could say, okay, I have a business. I want to leave it to my kids. Well, what happens if your kids don't want to run it, right? And there are certain circumstances where the kids say, I don't want to run it. So in that particular case, that business owner may say, you know what, I do want to sell it. But guess what happens? If you sell it, let's say you start off a business and you put in $100,000. And over the years, that business grew to be $1 million. I'm just going to use simple math, okay? Well, when you sell it, guess what? The IRS is going to be your buddy. You got capital gains, 40%. Think
40?
about that. Well, yeah, that's a going up there. So what if I told you there's a program, the business owner out there do not have to worry about that capital gain? Well, what do? There's a program called CRT, Charitable Remainder Trust. I don't know if you get familiar with it, and this is part of financial planning for business owner. So before you sell that business, you take that business and you put it into a charitable remainder trust. You move the asset underneath that because you're giving it a charity. Does that make sense? It's charitable remainder. Now, once that $100,000 business, it's really $1 million, is underneath that trust, you execute the sale transaction, that $1 million sales, underneath that trust. Because it's underneath the trust, therefore there's no capital gain, because the IRS consider that as charitable, okay? Now, one of the rules about charitable remainder trust is that the government knows that you're giving it to a trust, therefore you're giving everything away But guess what the beautiful part is? It allows an owner can get an income stream because they have to have some kind of income stream. You know, you just don't give everything away, no income stream coming from it. So with that trust underneath it, it'll have, let's say, $80,000 a year coming to you, you know, as a owner. So first, you're not paying the capital gain. Not only that, the IRS will give you a part write-off because it's a trust. Now, so you're getting an income, you're not paying capital gains, right? And you're getting a write-off. Everything is beautiful except one thing. Your wife's gonna get you. You gave everything to the trust. What is it for the family? Isn't it right? You worked so hard and now you're giving everything away. Are you for real? Well, guess what? Underneath that trust, if you're getting an income, you know, $70,000, $80,000 a year, no problem, honey. What I can do is I can buy a life insurance policy that's worth $1 million. At the time of my death, the family's getting $1 million tax-free. So that particular case, you know, it solved that whole situation. So one day, yes, that owner's gonna kick the bucket. I like to use that term. And what happens when he kicks the bucket, that trust, guess what? Move it over to a foundation. You can name it, you know, Anthony Foundation, your choice. And what happens, that foundation, the rules is that that foundation has to give 5% every year to a charity of his choice. Have you ever gone to a hospital or a university, you see a little block that said it was by such and such? Well, that's how charity is created. That's how foundation's created. So you technically could give it to, you know, 5% every year. Your family, even though you're gone, it's in your family's name or in whatever name company you want it to be. Gives it to, you know, Georgetown. You know, I like for my kids to go for free for the next 5, 6 years to grandchildren. And again, it's beautiful because what it does is a giving thing, and at the same time, it's a way of doing business. You know?
Well, you know, that sounds complicated. Is that something that you have to get an attorney and a CPA
Absolutely,
involved
yes,
in?
yes.
Yeah.
And I, you know, talk to someone that does these similar kind of things, you know, in the financial field. Not everybody specializes in that because that's one way to do it. But that's just one piece of it when you ask me about selling of it, okay? But at the same time, let's say if you decide to keep the business, and then, you know, you may be at a point you say, you know what, I wanted the business to create some kind of stream of income for me, you know, and I want to be able to have. Well, we have unique programs, we call it leverage planning. It's really unique where I can basically go to an owner, here's the rules for the leverage planning. You gotta be in the business minimum 2 years, okay? And your score minimum, your credit score has gotta be at least 680 and above. Your net worth gotta be at least $250,000, whether it's your house, your car, your jewelry. In that particular case, the leverage planning program is that I can basically help fund a business owner business between $100,000 up to $3 million instantly. Why? If you're going to put $200, $300 a month aside for your retirement, that's kind of tough. It takes a long time. You only got 5, 10 years. You don't have enough time horizons. With this new plan, if I gave you $500,000 instantaneously, now we're using the bank's money to create money for the clients for retirement. The only thing is, the bank say, "What's the?" You know, you're going to say, "What's the catch? Why would you just give me $100,000 or $3 million?" Because I can see a question on his mind. Why would you so arbitrarily do that? Well, the bank's going to say, "Well, I'm going to loan you the money." Remember when I asked you about credit score and all that? Because we're going to do a loan against the business, and it's going to be charged simple interest. Best type of loan you can have is called simple interest. The bank is going to ask me, where are you putting the money? Well, I'm going to put into a product called indexed, where you can't lose. This is the next generation wave of product that's coming out in the financial field. So if the market goes up, the client goes up, market goes down, they do a lockdown, no losses. Why is that important? It's so important is because 5, 6 years from now, even if you go out of business or you retire, you say, I don't want this anymore, guess what? Remember your original $500,000 I just gave you? Well, at that time, it could have grown to be $600,000. They pay off the $500,000, the owners do walk off with $100,000. Wow. So these are very unique stuff. It's not complicated.
That's simple interest on the business, so then that's automatic tax write-off?
That's right. Bring the CPA in and be able to do.
Wow.
Very unique stuff. Huh?
What other kind of products?
Well, we have a lot of time, nonprofit. A lot of nonprofit companies out there today would love an opportunity to offer benefits. I see a lot of business owners, they don't have to fund the capital. You know, the struggling there is. Well, what if I told you if they're nonprofit where we can have a way where we could create, let's say it's a 403B, 457, any of those unique plans, you know, for retirement, well, no cost to the business owner. All the employees contribute monthly through a paycheck to this plan. Every money they put in, some of the insurance carrier would do matching 5%. So every money employee puts in, it's automatic free money, 5% for the next 7 years. And again, they'll put a rider on it, it's called index guaranteed lifetime income, that if anyone's age 35 in that companies have a 6% guarantee on the lifetime growth. I share you guys this is because I do have radio show and TV shows that I go out and I educate a lot of folks on these new next generation of products that's available out there. And I don't think financial advisors and other folks are talking about it, but many more, you know, are beginning to talk about the safe money concept, you know, red money, green money. So, you know, if you turn on Saturday morning radio, you hear it. On Sunday, different financial advisors begin to picking up on this. You know, so.
Hey, thank you, Shirley. Anthony?
It's considerations for starting a business. Many people right away ask, do I write a business plan? Do I get financing? What do I do first? And we tell them, time out. First, you start with you. You. Because ultimately, you are the product, whether it's a service or product company, because it begins with the proposed owner. And we urge them, using our resource partners as well as our agency, to conduct a self-analysis. We even published a checklist for that individual to ask themselves, how's their health? Will they be able to work under the rigors of starting a company? We're talking working 70 to 80 hours a week. Yeah. And many of them think, a business owner, I'm not gonna work that many hours. Think again. Next, employees. And how are you as a people person and working with a bunch of different individuals? And as well as that, working under pressure with customers and down markets as well. Are you able to withstand the stress and pressures of business ownership and cycles of the economy? And then how is that individual's credit? Because they will need good credit to get financing. Many of them think they won't need financing. If you get a project you can invoice every 30 days, but your staff wants to be paid every Friday and or every other week. And so there are cash flow considerations. And then looking long term, where do you want to be 5 years from now? Because that will impact the type of business model they should pursue and the type of market they should pursue, as well as the type of staffing they should pursue. But many individuals do it just in a spontaneous way, serendipity. Entrepreneurs thrive on serendipity, and so those are internal conflicts. Entrepreneurs like to work alone, whereas really they need to be now team players. And most of all, individuals that want to start a business were usually very high achievers in their employment. But those high achievers were maybe technical people, and now they've never really sold in their life. And now they are salespeople.
Right, that's right.
And because they are the point person for their company. And if they have somebody else selling for their company, then really they don't own the customers.
Right. Anthony, we're going to take a short break.
Good.
We'll be right back. We're going to take a short break, station break, and we'll be right back with our expert panelists and our special guests. So don't touch that dial.
Hello and welcome. Skills to Pay the Bills is a show that provides information to everyday citizens, families, and businesses regarding the current economy and how to protect themselves. We have some exciting programming in the upcoming weeks featuring subject matter experts from the Small Business Administration who will share information and demystify the whole 8A certification process and set aside contracting for women, veterans, and minorities, as well as provide education for small business owners. So I encourage you to watch Skills to Pay the Bills right here on Fairfax Public Access Channel 10 on Wednesdays, 1:30 a.m., Thursdays, 10 a.m., and Fridays, 7:30 p.m. For PG and Montgomery counties, please check your local cable listings. For more information, please feel free to visit www.sba.gov. And don't forget to watch Skills to Pay the Bills.
For those of you who are just joining us, you're watching Skills to Pay the Bills in part one of our two-part series on risk management strategies for small business owners and their families. Providing content for this episode, Shirley Liu, Executive Field Chairman for First Financial Security, and Anthony Ruiz, Assistant District Director, 8A Business Development. Prior to the break, Anthony, you were talking about the high achievers and things change for them. Could you pick up there with that?
Sure. As I indicated, individuals that want to start their business were most likely very high achievers when they were employed for another firm. But they were high achievers in a technical capacity. And now, as entrepreneurs and business owners, they are now salespeople. And they've never really sold in their life. They have no professional sales training in business-to-business sales, and many of them want to get, especially in this region, into government contracting, which is even more complicated, business-to-government contracting. And many of them approach it in a mechanical way, rather than a more professional manner of business-to-government or business-to-business sales. And so they overlook the need for professional training and preparation. If an individual wanted to be very successful in starting their business, we would tell them, look, plan 2 years from now to start your business. And now during that 2 years, train and prepare. How's your credit? Does your credit need repair? Line up your financing in advance while you're still employed. And then learn the market, study the market, get acquainted with suppliers, get acquainted with prospective customers, so that you truly, once you start your business, you are in a better position to make it succeed right away. That's why many businesses, during the first 2 to 3 years, they're cash poor and they're very volatile. 90% of startups fail within 3 years. Why?
Wow.
Lack of planning and preparation. And the planning and preparation starts with the individual. Comprehensive self-analysis. Do they really have what it takes, health-wise, as well as up here, here, and in their gut?
So do you walk people that come to SBA, do you walk them through each one of those steps?
Yes, we
that
do.
You're doing, because
and we do that through our resource partners. SCORE, the Service Corps of Retired Executives, the Small Business Development Center, and the Women's Business Center, located in each of the states in this region and throughout the country.
And the Women's Business Center, I wonder why I'm concerned about that. But the Women's Business Center, what is that like? What is that program?
The Women's Business Center is comprised of counselors there that provide free, one-on-one, face-to-face management consulting, and comparable to what a lot of private consulting firms would charge anywhere from $50 to $300 an hour.
That's right.
So in many ways, to the individual, that's a grant, because there's no limit in the use of that resource, not only on preparing and starting the business, but also loan packaging and obtaining financing with the appropriate lender, and also promoting the business and obtaining and retaining customers, and from there, strategic growth.
So is it a matter of just picking up the phone, making a telephone call to say I want to be a part of this, or do you have to go through some type of testing or questionnaire?
Like you said, you pick up the phone or go to their website and hit the Contact Us icon and make an appointment, just like you make an appointment with any doctor or dentist.
What is that website?
It's
your website?
Our website, sba.gov.
Okay.
And through our website, you could obtain the locations of the Women's Business Center, the Small Business Development Center, or or SCORE as well.
Right. Well, you said something that really resonated with me, because I never thought about high-tech people in a profession for so many years and then switching from that into government contracting and not having a sales background, and where that's a great deal of their income is going. So what, do you help them with that if they don't have a professional sales background, can they come in to you and you help them?
Yes,
Navigate
again,
through that?
through our
Is that through SCORE?
resource partners,
Okay.
we train them in business development. We train them in the makeup and nature of the market, and we train them how to promote their business.
Okay.
But we also encourage them even to seek professional resources beyond that, depending upon how strong or weak they are.
Right. Now, this may sound like a dumb question, but I'm going to ask it anyway. You mentioned the term government contracting. What exactly does that mean?
When I say government contracting, speaking as a federal agency, because when folks come to us and want help in government contracting, they're mostly talking federal government contracting, both the military side and the non-military side. But there is government contracting as well through state and county, and many firms or individuals that don't have a lot of experience in federal, because it's much more complicated, we advise them, look, start at the state and county level. That way you can make mistakes at that level. If an individual were to start cold today in trying to get business with the federal government, it will take that individual about 2 years to finally get a contract, just because of the complexity of that type of market.
And when you say, is that an 8A contract, or are there other types of set aside monies or contracts that are available that might not take as long?
Oh, I'm glad you asked me that.
Great, I asked
the
a good
biggest
question.
misconception minorities have, and part of that, the agencies are guilty of that. Many contractors say, if you're 8A, you could have gotten this contract.
Right.
And that is a misconception. You don't have to be 8A to win government contracts if you are a minority. For example, there is a self-certification program, the Women's WSB, Women-Owned Small Business. In 8A, you have to be in business full-time for 2 years. WSB, you can start a business today and get certified today.
Get out of here.
Wow.
Really?
And it's self-certification, but you still have to authenticate the information if it's demanded by a contracting agency. And the way that works, every contracting officer has a unilateral authority to set aside a contract if he's identified 2 or more women-owned small businesses that can compete on that contract. In addition to that is self-certification small disadvantaged business, which is open to all minorities. Again, you could start your business today and get self-certified as an SDB, small disadvantaged business. And there are many contracts that are set aside for small disadvantaged business. Or if you're not minority, you register in sam.gov and through the Central Contractor Registration as a small business. And there are many, many federal contracts that are set aside as small business set aside.
Wow. And are there limits on the amount of dollars that you can compete for? Or is it competitive? It is competitive.
Well, it is competitive, except for, say, if in the 8A market, there is a market for sole source contracts, for contracts up to $4 million, and we require that they be sole source. Beyond $4 million, we require that they should be competitive.
Okay, now when you say sole source, does that mean that?
That means that an agency has identified one company that they want to perform that contract.
Okay.
And so they're going to award that contract to that company with no competition.
Okay.
The easiest way to break in, which we advise to new individuals in the federal market, start at a small level to learn the process. And there's a genre of contracts or requirements that are called simplified acquisitions. These are contracts of $100,000 or less, and in fact, there is no contract, and there is no RFP, and it's a much more simplified process. And there's many companies that do nothing but that and thrive on that, and it's a very, very good way to start. In addition to that, there's a variety of very good books that are written on how to sell to the government. And that's a good handy resource as well
Right.
in terms of someone using this type of literature to educate themselves. In addition to that, in LinkedIn, there are several groups that specialize and focus on government contracting and provide a lot of valuable business intelligence. And so that's where we recommend these individuals sign up your company in LinkedIn and then join these federal contracting groups.
Wow, that's amazing. What about veterans? I have a heart for veterans. Is there anything out there for the veterans?
Yes. Under statute mandate, 3% of all federal contracts, and we're talking 3% of 500 billion,
Wow.
Okay.
are to be set aside for service-disabled veteran-owned businesses.
Okay, that's great. Well, our time is just about up, and we want to thank our panelists and our small business owners and community observers for their participation in part 1 of the series. For our cable television viewers, part 2 of the series is coming up soon, so please don't miss the episode. If you have any questions or comments about today's show, or perhaps you would like to be a guest on Skills to Pay the Bills, simply email me at skillstorock@gmail.com and tell me a little bit about yourself. Thank you once again for watching Skills to Pay the Bills. Bye-bye.